I'm going to explain the accounting equation in simple terms. The accounting equation is simply this: assets equals equity plus liabilities. So what that means is that whatever you have on the asset side, it has to be the exact same amount as the combination of the equity and liabilities. If it's not, then something is wrong somewhere. But that is simply the accounting equation. So the first question is, what is an asset? An asset is anything that you own. Equity is whatever claim you have to the business. And liabilities is anything that you owe. So if you owe someone anything, you know that forms part of liability. Now so the first trick is understanding or identifying what is an asset, what is equity, and what is liability. Once we've identified that, then we know if it's an asset. The question is, does it increase or does it decrease our assets? If it increases our assets, it increases on the debit side, we put it on the debit side. If it decreases our assets, we put it on the credit side, as I've shown here. If it's an equity, it decreases on the debit side but increases on the credit side. And for liabilities, it's the same as equity. Decreases on the debit side but increases on the credit side. So if we can identify it's an asset and we know it decreases our assets, then we know we put it on the credit side, and so forth for equity and liabilities. So the accounting equation is simply a foundation, but it's a very good foundation you can lay for your accounting journey. Whatever you're going to do in accounting, whether the financial statements or whatever you're going to do, you'll always refer back to the accounting equation. So in the next video, and I will put the description, the link to that video below, I'm going to look at a few examples that relate to the accounting equation that will explain further what the accounting equation is. Thanks for watching. Cheers.